Welcome, Rod Powell here. Back again, talk about one of the best kept secrets in the entire insurance industry as far as I'm concerned. And that is, dun, 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 how do insurance agents earn income? So let's talk about it. Here we go. Before I got licensed, I met several insurance agents and they always seemed to be in a good mood. They were professional, they were well dressed, and they seemed to be doing pretty well. But I always wondered how. How do they make money on something that costs $50 or even $100 a month? I just didn't know. Well, as I learned, agents make money a variety of different ways. Well, none of us actually make money, right? I mean, the Fed makes it and you and I earn it, you know, if we're working for it and worthy of it. But you know what I mean. So let's start with the one that most people are familiar with or think of, and that's commissions. Okay, now let's be real. When people think about commissions, one of the first things they think is, I'm not gonna make any money. However, wherever you work, the person at the top of that company is working for commissions. And it's more than likely their commissions that are actually paying your salary. In fact, any scenario where you find a transaction, there is a commission. So don't ever get tricked into thinking commission is something scary or even something that's beneath you. Just remember, many of the people that you respect and trust work on a commission basis. Your doctor, your lawyer, your dentist, your lawn guy, your hairstylist, your plumber, shall we go on. My point is, commission-based careers are more than you think. It just depends on how you choose to operate in your industry as the person who is receiving the commissions or the person who is being paid by the person who's receiving the commissions. And look, both are valid based on your individual objectives. Now, insurance commissions are typically paid based on the premiums of the policy, but there's a wide range in how those commissions are paid out. For example, a health insurance broker might get 2 to 8%. If it's a major medical group scenario, it could be 10 to 15% if it's property and casualty. If it's, life insurance, shoot, it could be 50 to 100%. The reality is there's a whole bunch of different ways and ranges that these commissions are paid out. But for the sake of simple math, let me tell you the story of our agent, Jamal. Now, Jamal gets licensed and helps someone to get a policy that costs $50 a month. And for that, he receives a 50% commission on that premium. Now, insurance companies factor that premium over usually a 12-month time period. So that would be considered $600 in premium. And Jamal receiving 50% of that annual premium is his commission, which is $300. So let's say Jamal helps 5 people get coverage in a week, basically 1 per day. He would earn $1,500. So if Jamal did that 50 weeks out of the year, he would earn $75,000 in his first year. Now, one thing to note about commissions is chargebacks. Chargebacks can occur if the policies Jamal was paid on cancel, typically within a certain amount of time, usually about 8 to 12 months. And if that happens, Jamal has to pay that money back that the carrier paid him. So it's in Jamal's best interest to only sell policies that he knows are truly in the best interest of his client and that they will keep. Now, another reason Jamal wants to make sure those policies stick around is the next way insurance agents generate income: renewals. Now, I mentioned renewals in my last video referencing the top 5 reasons you should get a license. So for Jamal, let's say the renewals were 5% of the premiums paid each month after the first year. That would mean he would start to earn $2.50 every month for as long as the policy is being paid or in force. And in our example, he wrote 250 policies that year because, remember, he wrote 5 applications a week for 50 weeks. Now, in all reality, all 250 of those likely did not stay in force. And by the time he gets to that next year, let's say 20% of those fell off, so there were 200 policies still on his book, which is another term for the policies that the agent is listed on. So that would be $500 a month. So in that next year, he would earn an additional $6,000 for the year based on those renewals. And as he added more policies, he would also be adding more renewals. And that would go on year after year after year. So after 1,000 policies, let's say, he's earning $2,500 a month. On 2,000 policies, $5,000 a month, and so on and so forth. This is why insurance is a great career path for individuals with long-term vision, because the magic really does happen over time. And with experience, which is why many of the most successful agents are the ones that have essentially just outlasted everyone else, right? Is with experience, you know, the more time you're active, the more time that you are working in the insurance industry, that's the more time you've been accruing, you know, or growing those renewals. And I'll tell you, I do know individuals who are receiving $300,000, $400,000, even $500,000 a year in these renewals. So it is not a game, ladies and gentlemen. Now, because Jamal had those 250 policies over the course of the year, that annual premium would be $150,000, writing $3,000 a week over 50 weeks. So he earned another form of revenue for agents, bonuses. Now, insurance agents usually have access to bonuses quite frequently, and they can work in a lot of different ways. It could be based on the week, the month, the quarter, the year, even their entire career. There are many different variables to this, but to give an easy example, let's just say Jamal received a $300 bonus each month for the $12,000 in premiums he had generated, right? $3,000 per week times 4, $12,000, okay? So that would be an additional $3,600 in earnings per year. And once again, this is a generic example. Every company is different, but in our example, the bonuses actually did not stop there, right? So you had $150,000 that Jamal wrote for that year, total premium. And let's say it also had an annual bonus of $5,000, okay? So let's take a look at Jamal's total earnings so far in this first full year. He earned $75,000 from commissions. He also earned $3,600 from his monthly bonuses and $5,000 for an annual bonus, for a total of $83,600 that year. So if Jamal worked the exact same model for 5 years, he would find himself with an annual income of $113,600, being made up of the $83,600 that he got from commissions and bonuses, and $30,000 he will be receiving in renewals at that point. Now, along the way, there were likely other bonuses not counted in this equation, whether it be, you know, monetary or other incentives. Now, for individuals who are really looking to deep dive into the entrepreneurial opportunities that insurance careers represent, I'm about to take you there with these next few, so stick with me. Now, there are some areas where the absolute top earners in the insurance sales industry reside. These are the agency owners, brokers, even team leaders in some companies. This is the most closely related to the B, or business owner quadrant, Robert Kiyosaki references in his book, Cashflow Quadrant. If you haven't read it, I would definitely recommend it. Now, in addition to generating revenue in the ways we previously discussed, they're also receiving split commissions or overrides. So first, let me explain a split commission first. Let's say one of Jamal's clients that he assisted in getting a policy was referred to him by another agent or broker. Now, because of that, Jamal may be obliged or required to split that commission, which was $300, remember, and he may keep $225 or 75% and give $75 or 25% in commissions to that broker agent that referred him to the client. This split would also pertain to the renewals. So let's say instead of the $2.50 renewal, for easy math, we just round it off and say he gets $2 and the other agent involved would get 50 cents. Okay, simple. Now, similar to split commissions are overrides. And with overrides, you aren't necessarily splitting commissions, but receiving an additional commission over and beyond what the agent is receiving. So for Jamal, let's say he does so well, after 5 years, he gets a new contract and he starts his own agency where he contracts 3 agents, he trains them, they help people get coverage via those policies. So let's say they receive their 50% and he's receiving, let's say 5% as an override from the insurance company in his new contract, his agency contract. So now Jamal has 3 agents working in the agency. Each of them helps someone get a policy that's $600 per year in premium, and they would receive their $300 and he would be receiving $30 on each of those policies. So if you take the 30 times 3, that's $90 for the 3 policies if they sold those on a particular day, right? And he may receive about the same in renewal. So let's say it's 2% instead of the 5% if he personally wrote it. Okay. Now at this point, he's only spending about half of his time in the field himself writing policies because he's spending the other half with the agents and building his business. So instead of the $150 that he had previously wrote in premium, he only writes about $75,000, which means that the money that he earns directly is going to be cut in half. Okay. So instead of the $83,600, and we can take the bonuses and all that into account, it's $41,800. But remember, he's still earning the $30,000 in renewals as well. And the overrides that he earns from those 3 agents, because they did $150 per year as well, okay, is going to be $22,500 at 5%. That's for $450,000 total. Now, he likely received bonuses on those agents' production as well. So let's say another $5,000 for that. So in his 6th year, his earnings would be $99,300. Wait, Rod, wait. It went down though. We're not done, because he also earned an additional $3,000 per year in renewals for himself and another $7,200 per year in renewals due to the policies that the agents wrote. That's still accounting for 20% chargebacks. So now Jamal is entering year 7 with $40,200 in renewals, and if he follows the same model for another 3 years, he's now earning $70,800 in renewals plus his $99,300 for an annual gross of $170,100. Not too shabby after a 10-year career. And what if Jamal had 6 agents or 10 or 30 or 100? I mean, he could scale this business as big as he could imagine. But wait, it doesn't stop there, because for Jamal, in his 11th year, he began buying books of business. This is another way insurance agents earn income. Simply means purchasing another agent's renewals, right? So at this point, he's no longer actively writing policies. His team has grown to 6. That means he's generating an additional $7,200 in renewals per year, right? So he meets another agent who is looking for some liquidity. Maybe he needs some cash. Maybe he wants to retire, whatever it is. And the renewals that agents earn in many cases are a sellable asset. Okay, just like banks sell mortgages, insurance agents can many times sell their renewals. Now, this is going into an even deeper rabbit hole, but we're going to keep going. We're going to keep going. So Jamal meets another agent who offers to sell their renewals, and he agrees to buy those renewals at, let's say, 2 times the revenue. So if they have the same $30,000 in renewals, right, that Jamal has, he may agree to pay 2 times that, right? So let's say $60,000 for the $30,000 a year. $60,000 for $30,000 a year in income. Now, that's a negotiation, so I'm not going into the details of how they work out the deal or how it's priced or whatever. But we're just using that as an example once again. So he paid the $60,000 for the $30,000 in income, and likely that's going to be good for, let's say, 10 to 20 years, depending on how those policies are. So if you're following along with me, at this point, Jamal is earning over $200,000 a year, $200,100 to be exact. And let's say he did that 3 more times in his 12th year, 13th year, and 14th year. He's now earning $45,000 from his personal renewals, $45,000 from agent overrides, $57,600 from renewals generated by those overrides, and an additional $120,000 from renewals books that he purchased, for a total of $267,600 per year, not including any additional bonuses that he's probably earning as well. I mean, they're likely at $30,000 to $40,000 at this point. Okay, but in his 15th year, he decided to simply just buy another agency, right? In which case, he's not only acquiring the book of business with those renewals, but also their existing customer base and any contracts they have in place. He can assume control of their operations. He can integrate his agent, and he can start generating revenue from their existing and new activities, right? So for easy math, let's just say that's an additional $147,600 in income each time he acquires an agency, minus the books of business that he's purchasing. But he's continuing to buy those books as well. Let's say one per year. So at the end of 5 years, Jamal is earning $1,155,600 in his 20th year. He then retires, and it's all because he got a license. Now you may ask, didn't some of those cancel or drop off along the way? Of course they did. But new applications were coming in continuously to support them. And proper planning does indeed prevent poor performance. So Jamal was smart. He invested his money when he earned it. And that's one of the many ways to retire a millionaire in insurance. Hey, thanks for hanging out. And please like and subscribe. If you found some value, please leave a comment. And maybe next time the story will be about you, if you decide you should get a license. Until next time.